Hello, everyone. Welcome to the Top Down TCM podcast. My name is Tyler.
My name is Cecile.
And today we're going to be talking about Li Lu, also known as the Chinese Warren Buffett.
Yep. Li Lu is a hugely successful value investor, student of Buffett, Munger, Benjamin Graham, reportedly produced 30% compound annual return since his inception in 1998. But before we get into all that, we should talk about his upbringing because it's pretty unique.
Very unique.
Compared to other successful investors.
Mm-hmm.
He was born in Tangshan, China. He survived an earthquake which killed 240,000 people. He was rotating between adoptive families because his parents were in labor camps during the Chinese Revolution.
Mm-hmm.
And then he went to university in China.
Yeah.
What did he do again?
Remember, he became the student leader in the TCM Square revolution. I think it was
in the Tiananmen Square.
Tiananmen, that's all good. Tiananmen Square. I think there was about like 1 million people there, right?
Yeah.
Going against the Communist Party.
Chinese Communist Party.
Yeah, and they wanted to to reform it to become more democratic and all that.
Right.
I think he was one of the student leaders who helped organize that and led it.
Mm-hmm.
I think when it all went down, I think he smuggled. Actually, fun fact: when everything went down and the square was cleared, he was actually smuggled out of China through Hong Kong. Through I think it was like some route that people smuggled Western goods from. So he went from Hong Kong all the way to the U.S. through a boat or some sorts.
Yeah, his involvement in that protest put him on like the list of 21 most wanted people or whatever in China.
Yeah,
it's pretty gnarly.
Yeah, then he landed, I believe, in New York.
Yeah, New York, where he was welcomed with warm hands because America doesn't really like the communists.
Yeah.
So I think he was offered scholarships and grants at Columbia.
Yeah.
Where he studied. What did he study?
He actually in Columbia he got 3 degrees. This man was at the same time.
Yeah.
And so a little bit of context for the audience. He actually, when he came from China, when he was smuggled from China to America, human rights activist groups actually helped him get set up here. He was living in like a 6-person home. 6-person, not home, like an apartment.
Yeah.
Where he studied on the couch and stuff. But from what I was reading, he actually got 3 degrees from Columbia. I think one was economics. Was the other one finance?
I think it was law.
Law. Oh yeah, law.
And then he got a master's in like business or something.
Yeah, or something in the sorts.
With 3 degrees simultaneously
in
Columbia.
And living within like a 6-person home, 1-bedroom home. That's crazy to me.
That's pretty sick.
Yeah.
So at his time in Columbia, I think he was introduced to investing through a speaker event with Warren Buffett.
Yeah.
One of his buddies, if I remember the story correctly, one of his buddies told him there'd be free lunch buffet there.
You can't turn down free lunch.
Yeah, I mean, you really can't. It's a lunch buffet.
Yeah.
But ultimately, the talk, changed his view on investing in life, really.
Yeah.
That's where he learned about value investing, and he started reading a lot of Benjamin Graham, The Intelligent Investor, which also shaped his career moving forward.
Fun fact also, he also... because he learned value investing, he was able to bankroll his investments with around college. I think he took out his student loans, right? Remember something about he took out student loans, and by the end of his college career, he actually amassed about like $1 million. He was able to pay back his student loans and make some money on top of that. That's crazy.
That's unheard of.
I mean, the man has 3 degrees.
Right.
Like the same time.
Imagine graduating right now in 6 months with $1 million because of your investments. That's insane.
Yeah.
But
that's crazy.
Yeah, after he graduated, I think pretty shortly after he launched his first investment firm.
Yeah, he did.
Because if I remember correctly, he had an internship at an investment banking as an investment banking role, and he realized that he was making more money in his own investments than his job. Yeah. So he just decided to, start his own firm, Himalayan Capital.
Yeah, I think during the first couple of years of his firm, I think he was just trying to find his way throughout the investment world. He wanted to do value investing, but he was kind of stuck between trying to generate returns for what was it? His
I think he had trouble attracting investors
because
of how unconventional his style was.
Yeah, and they really pressured him to do short selling and day trading.
Yeah, because that's what like the norm was.
Yeah, normal hedge funds done.
It was also during one of the tougher periods, the late 90s, where stock market valuations were
crazy
historic.
high. Yeah.
So I think he suffered a minus 19% loss in his first year, right?
19% loss his first year.
Yeah.
Then I believe where the really big changing point was when he had dinner with one of the human rights activist women, and the woman I believe was either the wife of Charlie Munger.
Oh, really?
Believe. Yeah. And they had lunch together, and I think Charlie Munger just talked to him, had a hard heart with him about like value investing and what it takes, and I think from there he started his second fund, and it was just pure value investing. If you guys don't know what value investing is trying to find a stock that is worth more in the future than is what's selling it for now. So I'll give you an example, like Apple. Believe Warren Buffett bought Apple when the P ratio was at 12 or really stupidly low. But he saw like the intrinsic value of the stock being worth more in the future.
Yeah, I think a big part of it is company fundamentals. Li Lu was kind of a psychopath in his research.
Yeah.
He would I remember a quote he said is, I don't know if he said this or Charles Munger said this about him, but they said something along the lines of, when researching a company, pretend that you're inheriting 100% of this company from your grandparents.
Yeah.
Like you're not gonna see it as just a ticker. You're gonna look at how they make money, how their finances are, how management makes a decision. You know, you really have to know it from the actual bottom to the up.
I think that's a big part of value investing, just like fundamentally knowing how the company makes money.
Because like when you're looking for value, there's always a reason that it's cheap.
Yeah.
So you have to find that reason why it's cheap.
Yeah.
And then go from there and see if it's worth your time.
Yeah.
And a good example of this that I saw about him was Russian oil stocks in the 90s. Because that was when the USSR had fallen and Russia was like going through shock therapy. So all like the previously owned government conglomerates were becoming privatized. And all the regular citizens were getting like these stock notes, which they didn't know. They thought it was a piece of paper, so it's like useless to them.
Yeah.
You know? So like this combination of the lack of liquidity and the absent market and uncertainty surrounding Russia, it meant like trades for huge discounts.
Yeah.
And I think Li Lu saw that. And also with the companies, they held monopolies in Russian oil and gas. Yeah. So it also added to like the margin of safety, which was a huge principle of Li Lu's investment strategy. Yeah. So just to show this margin of safety, even when Russia devalued currency by 90%, investors who bought in 1993 were still up tenfold after the market decline. Damn. And because of the huge Russian companies that held monopolies in Russian oil and gas, that just added on to the moat and the margin of safety.
In case you guys didn't know, the audience, what margin of safety is. Margin of safety is that you have your intrinsic value, the value you think the stock is worth in the future, minus your purchasing or the current market value of your stock. The margin of safety is the difference between those. Yeah. So that the margin of safety gives you like hypothetical breathing room because you think the stock is worth more in the future than it's worth now.
Which is huge in value investing.
Huge, because you're able to not absorb, but you're able to classify why you're able to take on certain stocks and have them deviate or be volatile in certain ways.
Yeah, I mean, it's protection. Yeah, everyone wants protection in their investments.
Yeah. But your catalysts have to be strong. There has to be a huge reason behind why you think the intangible value is worth more in the future than it is now.
Yeah, which is... a good example of that is Timberlands. Yeah. Which is one of Lou's very early investments. What Lou liked to do back in the day was look at the low list, which is all the companies that are at 52-week lows. So he would research those terrible companies because if you're wrong, you won't lose a lot. But if you're right, you're going to make a lot. Which is, I mean, pretty good philosophy to have there. Yeah. But Timberland, it was trading at what he called a clean value, which consisted mostly of tangible liquid assets, working capital, and $100 million in real estate. So shares in 1998 were trading at 5 times earnings, which equated to $28 a share, which is with 11.4 million shares outstanding, which is a market cap of $319 million. But at the time, the company had current assets of $387 million. So the whole company could be bought out for less than the company's current assets. So, I mean, it's a no-brainer there for Li Lu. They were also paying off debt steadily from 53.4% of a debt-to-capital ratio in 96 to 27.3 in 98. So, and the family owned it. They were buying back shares strategically when stocks were cheap. But at the time, because they were going through a lot of litigation issues, that's why it was valued so poorly. But in just 2 years, the stock went up 700%, propelled by earnings growth of 30% a year. And you know, Li Lu, he's a very fundamental guy. And another thing about Li Lu is he likes to have a very concentrated portfolio. So when he does all this crazy research on a company, he's not gonna put like 3% in it.
No.
He's gonna put 10, 20%. So he put, I think it was 20% of his portfolio in Timberland and achieved insane returns with relatively little risk because of his research.
I think that's the core fundamental of value investing.
For sure, yeah.
It's like, I think Warren Buffett best said it. You have a punch card, right? This punch card has 10 punches in it. You want to make sure those 10 punches are the best investments you make in your life.
Oh, yeah. BYD? Okay, that's a good one. Because Charles Munger, when they were first becoming friends, Li Lu and Charles Munger were becoming friends. One quick thing about Charles Munger is he once quoted, he likes to partner with people who can be dropped into a completely new country without any resources and still make a fortune. Which is hilarious because that's exactly what they did. So it's pretty obvious that they became good friends.
Extremely extraordinary, I'm telling you.
And then I think Li Lu actually introduced Charles Munger to BYD.
Yeah, that's true.
BYD, which is a Chinese battery producer and automaker.
One of the biggest catalysts for Li Lu for BYD is actually the Chinese manufacturing sector. I think it was he had a big bet on it. He believed BYD can capture like the evolution of EV cars even in 2002, right? That's crazy.
That was when they were only doing batteries.
Only doing batteries.
Now, of course, that is crazy.
Now, fast forward to 2024, they do batteries and cars, correct?
Yeah, that's true. One of the quotes, because Li Lu introduced him to BYD, Charles Munger said something like, I've read Barron's for 50 years. In 50 years, I found one investment opportunity in Barron's, out of which I made $80 million for almost no risk. I took the $80 million and gave it to Li Lu, who turned it into $400 million.
That's crazy.
Because of BYD. which is nuts.
Yeah, I think that's the power of value investing. And it's just like crazy amounts of pure research, concentrated research on one company to understand the company inside and out. I think Warren Buffett best said, you're not buying a ticker, you're buying a company. Right,
exactly.
I think that's how like we should approach overall in our investing career as well.
Definitely.
It's like when we go and see an opportunity, we don't want to I think the worst thing you can do is see the stock price first. I think you should understand the company, understand where it's, how it makes money and where it is in the marketplace. Then look at the stock price.
People like to look at a ticker and see it as a ticker and nothing else. But you have to look at it as a business. And see how that business operates.
It's like that level 2 thinking. It's taking a step back and see what the company actually does.
It seems very simple and straightforward from this, but no one is really doing that. You know? Not a lot of people were doing that. I
think the best example is Peloton, the iPad bicycle.
iPad bikes.
I remember it was crazy high valuations. I think if people realized that it was just a bike with an iPad and took a step back and really thought about the business itself, I think not all people have gotten burned by buying into that stock.
I mean, they still have a chance. They can make it.
We'll see.
What was I going to say? Oh, yeah, something about Li Lu is that since he was born in China, and a lot of what Charles Munger and Warren Buffett preached was to stay in industries that they understood.
Yeah, the circle of competence. That's what
it was. Yeah, circle of competence, which helped them avoid the .com bubble.
Yeah,
which was really good for them. And Li Lu did this, but instead of industries, he did it with geography. In geography, he did Asia and China, which was just a huge step up because they were going through the Asian financial crisis, which he took advantage of.
Yeah. Also, on the side note, I think value investing works best during down markets because you see a lot of good opportunities to enter certain positions.
Absolutely.
Yeah.
That's. I think that's where his nickname came from, Chinese Warren Buffett, because he was fishing in China. You know, he wasn't searching in America very much. But after he was settled, a lot of his returns came from China, which is pretty cool.
Yeah.
So Himalayan Capital. I think there's only one fund managed at the firm, and which Li Lu has been running since inception in '98.
Since college, that's crazy.
Yeah, that is nuts. He primarily focuses on publicly traded companies. In Asia, emphasis on China. And since inception, I think we mentioned this before, but they achieved a 30% compound return. And it changed Li Lu's initial student loan of $300,000 to today $9 billion.
Man, that's crazy.
I think today he has a very concentrated portfolio. I think it's four or five, six companies. It's the origins were on buying very cheap stocks. Because that's all he could afford. But as his assets under management grew, he shifted more to the Buffett perspective, where he's buying great companies at a fair price.
I think the better way to say that is value growth investing. Buying companies are you think worth more tangibly in the future than is worth now. I think that's where Warren Buffett kind of switched his investment styles. Like there is cheap companies, right? There's a reason why they're cheap.
Oh, absolutely. Yeah,
I think that's the reason why it's just he found more growth in those value growth companies instead of just buying cheap stocks. I think the best example is Apple. Again, you buy a low P. What was the price earnings, 12 or 15? Now it's worth billions and billions of dollars.
He also lived by the idea that the volatility of prices isn't really a risk. You know,
as long as you're that margin of safety that we talked about, your intrinsic value is higher than the current market price. I think that's what it is.
The only risk is losing, permanent loss. You know,
permanent loss.
Because not only is a price drop not a risk, but it's an opportunity. You know, it provides a great opportunity to enter because when people are leaving, it's pretty fundamental, but it's important. What can investors take away from Li Lu's story?
I think the biggest thing that investors can take away from Li Lu's story is just the margin of safety concept and also understanding the business itself. I think to first start off with margin of safety, right? To refer back to it, it's just your intrinsic value, how you value the company, minus the difference of your current market price, and that's where you get your margin of safety. You think the company is worth more than what it is that's currently priced today. I think what investors can do today is actually do some more research on certain companies, understand the companies for the actual, understand the company, not just buy it for its ticker.
Right. I mean, not even understand the company. You also have to understand yourself. You have to adopt the position you're taking because of the right reasons and evidence. Not because other people agree. It's not because, it's going to go up 30%. Everyone let's just buy. Having a bit of a contrarian outlook is pretty helpful when it comes to value investing.
I think the biggest part of value investing is being outside of the trends. It's being the one guy that goes against everyone else. Let's say market sold off 30%. You think that the market, because it sold off 30%, you think it's going to be worse in the future. Actually, a value investor will look at it as a buying opportunity if the conditions are right, of course.
Looking where investors are selling for reasons other than fundamental assessment of the value. You know, that's how it helps having that contrarian outlook. So always looking at the beat up and unloved companies.
It's I think where I first heard value investing was in our Smith portfolio class. I think Professor Ko talked about how look at different sectors or different industries where the capital is not really flowing. So let's take example for today. You see how like technology is taking up most of the capital within the industry. We should be looking around other industries such as like oil, oil, renewable energies, or even home building, for example. There could be something there.
Yeah, we went over the deep understanding of businesses. Another thing Lilu emphasized was long-term thinking.
Yeah,
because he's not a short-term trader at all.
No,
he focuses on having a deep understanding of the business.
Yeah,
and holding that business for decades.
Yeah,
I think he emphasized a lot where the best returns often come from letting compounding do its magic.
Yeah,
which I mean sounds surface level. Obviously, everyone knows that.
Yeah,
investing 101, but it's still important to note.
Yeah, I think other things that are derived from that mentality as well as long-term investing is like understanding the management. I think investors today, specifically our generations, they don't really look at the management team.
Yeah,
they just look at the stock price, and that's all. I think the management team plays a huge role in how the company will evolve in the future.
Definitely.
Yeah, I think Warren Buffett best said is like he buys companies with people who run the company well, and he just leaves it alone. That's his thing. He doesn't go in there and try to implement his own thing unless the company's failing. But
definitely,
usually, it's just he buys good leadership. I think that's a huge part of value investing.
That is a huge part. That definitely plays into the intense research you have to do on the companies you're
most
looking
definitely
at. Because it's hard to find information on management teams a lot of the time.
Yeah, I mean, it's either they're private on LinkedIn or they don't really talk much. It's really hard.
You have to become a bit of like an investigative journalist to figure out how they're leading the team and stuff. But yeah, management is a huge part of understanding the business. Yeah,
I think this cool thing I read. I think there's this investor book I read. It's called Philip Fisher, and what he did to gauge how management was is he goes up to companies, or he goes to companies like their stores, or he interacts with their employees and gauge how management is and how the company is running. He actually goes to these locations and actually like partakes in their business to see how it is
from a consumer perspective.
Yeah, consumer
versus
perspective.
Like an investor perspective. Yeah,
I think he implements it like you have to go and see what you're buying. That's what he pretty much is.
Yeah, that's very interesting, especially when there's so much capital on the line.
Yeah.
Okay. Closing thoughts. Lilu's life teaches us a lot. It's a funny story. It's not just about investing. Is not just about skill or luck. It's also about persevering, having a curiosity, and like very strong principles. I mean, he's shown that throughout his whole life. From an earthquake, from Tiananmen Square protests, from returning, returning minus 20% in his first year of investing. Yeah, like a lot of that would break people. But persevering through that adversity, it's possible to rise above whatever's thrown at your face.
Yeah, I think the biggest takeaway for students is that perseverance, right? Yeah. Rising above the bar and going above beyond despite your circumstances. I think Lilu is a great example of like American success. It's just getting down and dirty, and you will be willing to do the work.
Yeah, it's a lot of long, hard work. Yeah. Which, you hear it a billion times throughout your life. Yeah. All the old people are saying, just work hard for 20 years and it'll pay off. But, it's cool to see that in actual action. Yeah. And especially at a time when markets like today are driven by speculation and short-termisms. It's very important to have a disciplined, value-driven approach. Yeah. Yeah. I think, on top of that, I think today us students can also take away is that we should always stick to our fundamentals. No, for sure. Yeah, no. Try not to fall into these short-term trends like GME, for example, or AMC. Everyone's making profit until it stops, right? I think sticking to your guns, knowing how the market operates, knowing when to get, when is a fair valuation, knowing your fundamentals and stuff. Yeah, having a good foundation is everything in investing. Yeah. I think we should end it off with a quote.
Yeah.
I have a good quote. I think this is from, I forget who this is from. It's either from Munger, Buffett, or Li Lu. One of the three. One of the big three.
Yeah.
They say, investing is an intellectual challenge, a competitive sport, and an art form all rolled into one.
Wow. That's amazing.
Which is pretty cool. It makes it very interesting.
Yeah. I just want to thank our audience for listening to our podcast.
For listening to all 30 minutes of this,
Yeah.
or whatever we could have done to.
This is the Top Down Podcast.
Yep.
And thank you.
Thank you for listening to the Chinese Warren Buffett episode. My name is Asil.
My name is Tyler.
And we are out of here. Should we do a cool transition? Hold on. I'm going to do this.